Hello, and welcome back to the channel. I'm Algabot, and today we're taking an educational look at an expert advisor for MetaTrader 5 called the Donchian Regime Breakout. In this walkthrough, you'll learn how this strategy combines a classic Donchian channel breakout with a trend regime filter and a volatility-based conviction check. We'll explore the entry and exit rules, read through the actual code, and follow an illustrated chart that shows both a long and a short example. Everything here is for educational purposes only, and it is not financial advice. Let's get started. So what exactly is the Donchian Regime Breakout, and what problem is it trying to address? At its heart, this is a trend-following breakout strategy built for MetaTrader 5. It can be applied to many markets, such as foreign exchange pairs, indices, or metals, and it runs on a single time frame, whichever chart you attach it to. The engine behind it is the Donchian channel, a simple but time-tested tool that tracks the highest high and the lowest low over a set number of bars. When price pushes beyond that channel, a breakout has occurred. The classic weakness of a raw Donchian breakout is that it signals constantly inside sideways ranges, and many of those breakouts quickly fade. This strategy tries to address that weakness with two additional layers. The first is a regime filter built on a long trend moving average, the exponential moving average. The strategy only considers long breakouts when that average is sloping upward and price sits above it, and only considers short breakouts when the average is sloping downward and price sits below it. Flat and countertrend conditions are simply set aside. The second layer is a conviction check based on the average true range, which measures volatility. A breakout only counts when price clears the channel edge by a defined fraction of that range, so marginal pokes over the band are filtered out. In terms of who might study this approach, it leans toward traders interested in trend following and position-style methods rather than rapid scalping. It aims to sit out choppy markets and participate when a directional move is underway. Remember, this is an educational breakdown of how the code works, not a recommendation, and every strategy carries risk, including the risk of loss. Let's walk through exactly how the strategy makes its decisions. The expert advisor evaluates its rules once per completed bar, rather than reacting to every tick. That means it waits for a bar to close before judging whether the conditions line up, which helps avoid chasing temporary spikes that reverse before the bar finishes. The first check is the regime filter. The strategy reads a long trend exponential moving average, set by default to 100 bars. It compares the current value of that average to its value a few bars earlier, 5 bars back by default, to measure the slope. For a long setup, the average must be rising and the just completed bar must close above it. For a short setup, the average must be falling and the bar must close below it. If neither condition holds, the market is treated as flat or conflicted and the strategy does nothing. Next comes the breakout itself. The strategy builds a Donchian channel from the bars behind the signal bar, 20 bars by default, taking the highest high and the lowest low, but deliberately excluding the signal bar itself. It then checks whether the signal bar closed beyond that channel. Using the close, rather than an intrabar touch, means the breakout has to hold through to the end of the bar. The third check is conviction. The strategy multiplies the average true range by a small factor, 1/10 by default, and requires the close to clear the channel edge by at least that amount. Because it scales with volatility, the filter automatically demands a larger break when markets are moving fast and a smaller one when they are calm. When a long qualifies, the strategy signals a buy at the ask price. When a short qualifies, it signals a sell at the bid. Risk is defined immediately. The stop loss is placed a multiple of the average true range away from entry, 2 times by default, and the take profit is set at 4 times the range, giving a 2-to-1 reward to risk shape. Only one position is held per magic number, so there is no stacking of trades. Finally, an optional chandelier-style trailing stop can follow a winning move, tightening the stop toward price to lock in an open runner, but never widening the original risk. Let's read through the core of the MetaQuotes language code, just as you would see it in the meta editor. At the top are the input parameters, the settings you can adjust before running the expert advisor. ChannelPeriod sets the Donchian window at 20 bars. TrendEmaPeriod defines the trend moving average at 100, and slope loopback, at 5, controls how far back the slope is measured. ATR period is the average true range window, 14 bars, and it feeds the conviction check, the stop, the target, and the trail. ConvictionAtrMult at 1/10 is how far beyond the channel the close must reach. SL-ATR-multiple and TP-ATR-multiple at 2 and 4 set the stop and target distances, while trail ATR-multiple controls the trailing stop, and lots is the fixed position size. Below the inputs, you can see the decision logic. The variables uptrend and downtrend combine the moving average slope with price being on the correct side. The conviction distance is the multiplier times the current range, and broke up and broke down test whether the signal bars close cleared the channel by that margin. Now look at the two branches. In the buy branch, when uptrend and broke up are both true, the code reads the ask price, sets the stop 2 ranges below and the target 4 ranges above, and calls trade.buy with those levels. In the sell branch, when downtrend and broke down are both true, it reads the bid price, sets the stop 2 ranges above and the target 4 ranges below, and calls trade.sell. Notice how both sides are mirror images of each other, with the same volatility-based stop and target logic applied in opposite directions. Now let's bring the whole thing to life on a chart. On screen you can see a candlestick sequence with 2 lines drawn over the price. The upper and lower edges of the Donchian channel are in blue, and the trend exponential moving average is in gold. Watch how the strategy waits, engages, and then manages each trade. Look at the first 3 candles on the left. Price is drifting sideways in a narrow band, and the upper and lower Donchian edges sit close together, hugging that range. The gold moving average line is nearly flat beneath price. At this stage, the strategy is patient. There is no clear regime and no decisive break, so it simply stands aside. This is exactly the kind of choppy, directionless zone where a raw breakout method would generate false signals, and where the regime and conviction filters earn their keep. Now watch the 4th candle. Price pushes upward and closes firmly above the upper Donchian edge, clearing it by more than the conviction distance. At the same moment, the gold moving average has turned upward and price is sitting above it, so the regime is confirmed as an uptrend. Every condition lines up, and the buy entry marker appears. As the position opens, the strategy immediately defines its risk. The stop is placed a set number of ranges below entry, and the take-profit target is placed twice as far above, giving that 2-to-1 reward-to-risk shape we discussed. Follow the next 2 candles higher. Price continues to trend upward, each bar building on the last. If the trailing stop is enabled, it follows underneath, tightening as the move extends and locking in the open gain without ever widening the original risk. By the time we reach the take-profit marker, price has traveled the full target distance, and the long trade closes on this illustration. That is one complete cycle. Patience, a confirmed breakout in the direction of the trend, and a defined exit. Now the character of the market changes. Watch the candle at the top of the move. Price stalls, and the first bearish candle appears, closing well off its high. Over the next couple of bars, the gold moving average rolls over and begins sloping downward, and price slips beneath it. A fresh, lower shelf forms as the lower Donchian edge steps down. The strategy is now watching for the mirror image of what we just saw, a downside break that agrees with a falling trend. Look closely at the candle where the sell entry appears. Price drops and closes below the lower Donchian edge, clearing it by more than the conviction margin. The moving average is falling and price is below it, so the regime is confirmed as a downtrend. Both conditions agree, and the short entry marker prints. Just as before, risk is defined at once. The stop sits a set number of ranges above entry, and the take-profit target is placed twice as far below. From there, follow the final candles downward. Price extends lower, bar after bar, in the direction of the trend. The trailing logic can again tighten the stop as the move develops. When price reaches the take-profit marker near the bottom of the sequence, the short trade closes on this illustration, completing the mirror image of the long. Notice the common thread across both trades. In each case, the strategy required 3 things to agree before acting: a trend confirmed by the moving average, a close beyond the Donchian channel, and enough conviction to clear the edge by a meaningful margin. When all 3 aligned, it took the trade and defined its stop and target immediately. When they did not, as in those early sideways candles, it simply waited. That discipline, Trading with the prevailing regime and standing aside when the picture is unclear is the whole idea behind the Donchian Regime Breakout. And that brings us to the end of our educational walkthrough of the Donchian Regime Breakout Expert Advisor for MetaTrader 5. We covered what the strategy is designed to do, how the regime filter, the Donchian Breakout, and the conviction check work together. We read through the core code, and we followed both a long and a short example on the chart. Remember, everything in this video is for educational purposes only. It is not financial advice, not a recommendation, and not a solicitation to trade. Every strategy carries risk, and losses are a normal part of trading. If you found this breakdown helpful, please like the video, leave a comment with the strategy you would like us to analyze next, and subscribe for more MetaTrader 5 strategy breakdowns. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.